Afternoon all. How are we all doing? Sorry, I'm in the middle of my espresso. How's everybody? Afternoon, Kennelly, Ian, Virginia, Monkey, Crum, Neo, Andres, AZ, Danny. How are we all doing? Afternoon, Fletch. Not a lot happened today so far. Anyway, bit of New Zealand dollar movement, obviously off of the news. A little bit of Swiss movement off of the news. But apart from that, Euros moved a little bit, but that's the Australian dollar. But yeah, so not a lot of movement apart from the Aussies, basically. So got out of some positions, which I'll go through in a minute. We'll have a look at the ADRs and everything as well, as usual. Just a quick recap on the DAX this morning. I didn't do much with the DAX. So the open was very, very quiet this morning. So obviously it's a bank holiday in Germany. So I wasn't actually anticipating a lot of movement at all, if any, in the DAX. And obviously the open, what we got was a nice big wick and then just sideways action for half an hour. And then we finally got a break. So I took it off as soon as we got that break because I was anticipating it coming just straight back down again and doing nothing. So got out with $350 odd of profit this morning, break even on the second position and a tiny profit on the first. It did actually get up to 2R. So if I'd have left it, it would have actually hit target, but it's absolutely collapsed back down again. So if you look at the movement that we've had on the DAX, it's very much the same as the other US indices. So it looks to me basically like the DAX has just been pulled around by the US index stock purchases today, or the sector purchases. So I don't think there's really much life in the DAX itself. It was just getting dragged around with the rest of the indexes. So all the indices, very, very similar price action today, almost identical, which is odd. I had to double check when I looked just before I came on that something hadn't gone weirdly wrong and the actual same chart was on every chart. Or same instrument was on every chart. But yeah, really, really identical price action today. So we will see what happens. Afternoon, Brian. Afternoon, Marco. Patrick, hello. What is 2R? What is 2R? 2R. Risk reward. 2R, return on risk reward. Yeah. So if you go there, you put a stop loss there. That's 1R. That's 2R. That's 3R. Yeah. So 2R would be twice the risk. If that's what you mean. Assume that's what you mean. On the DAX chart, yeah. Hi, Joe. Afternoon. So let's have a look at the indices before we open. Actually, let's do news first. So where are we? Tuesday. So we've had the Aussie rate come out as expected. We had the Swiss franc CPI come out lower than expected. So we've had a weak Swiss franc. We've had a weak Aussie dollar today. Those are the two main movers today. Obviously, everything else is flittering around about them because that's where all the price action is today. We've got JOLTS at 3 o'clock, half an hour after the open. Doubt very much whether the market will hang around for that, but may do. We'll see. But JOLTS is very hit and miss. Does sometimes move it and sometimes it doesn't. Apart from that, we've got no other news today. You've got to be aware, obviously, of the New Zealand dollar news tomorrow morning. So that'll be before the Frankfurt session. We're expecting a 5.5, another freeze on the rates, which we'll probably get. Saying as we had one from the Aussies, but you never know, we might get something different. I'll be very surprised if the New Zealanders put theirs up above 5.5. They really don't need to, but they might do. You never know. So the New Zealand dollar at the moment, we are sitting up at 6 on inflation, the same as the Australians. Inflation is coming down fast, same as Australians. They are over 1% higher than the Australians, so I doubt very much whether they will increase rates. So as you can see, pretty much everybody is freezing rates apart from the euro. So I'm not expecting a rate increase tomorrow for the New Zealand dollar. But then again, we weren't expecting a freeze on the Swiss franc. We were expecting a rise and we didn't get it, did we? We got a freeze. So it's not necessarily going to be a freeze, but it probably will be, which will be weakening again for the New Zealand dollar. So, so looking at the indices before the open, the Dow, we're in an interesting position on the Dow in that we're down at this monthly low from last month. We are very, very close to yesterday's low. So any downward push on the Dow today could potentially take us straight into support, which is here. Yeah. So we could get a very quick bounce play today if it breaks to the downside. So might be tricky if we do go to a downside break. Other than that, there's no support for the Dow. The S&P, we've got support at the monthly low. So last month's low is at ADR. So good move down into ADR for a bounce. Upside today, you're probably looking at yesterday's high, which is ADR. So easy ADR up and ADR down on the S&P. NASDAQ, same thing. We've got a lot more room on the NASDAQ, though, back down to that monthly low. So we've got the previous week's low, which is just about where we are, and ADR. Upside yesterday's high and previous day's high, which is within ADR. So there's a lot of movement up and down. The NASDAQ's a little bit of an anomaly compared to the other two in that it's got a lot more room to move to the downside than the others have. But we'll see where we go at the open. We've got a couple of minutes to go, or a minute to go. So we'll just go with the volume, basically. Go with wherever the market decides to take us. Looks like there's some buyers coming in at the open. DAX is having a nice little rally at the open. We'll see what happens, see where we go. Zoom in a little bit on those. Afternoon, Baggy. Brian, two ruches. Two ruches, could be two R, two ruches. Afternoon, Dion. Afternoon, Yaraki. Peter, I'll just call you Peter. I'd never say your first name. Afternoon, Philip. What's the good word? Morning, boss. Morning, chat. Morning, XRupdate.news. No good word. Profit is a good word. I like that. Profit's a good word. Yeah. Word of the day. 10 seconds to the open. I've completed testing on this morning on MT4. Uploaded and verified to MQL5 marketplace. So it's ready to go. MT5 version, got to work on that. A little bit of slippage on the S&P there. Two entries at different locations. Long NASDAQ, long Dow, long S&P, but slipped a little bit on that one. So breaks to the upside, continuing the pre-market move. See if we get some volume moving forward. Very explosive open, but we are moving up. So we'll see if that holds. Dow's pulling back a little bit. All pulling back a little bit. A bit of resistance to the upside. Afternoon, Potgaiter. Afternoon, Prince. Derp. Afternoon, EMAC as well. Good day, good people. Pound US dollar. Don't know who you are. We'll have a look at the FX pairs in a minute. We'll just wait for the open to finish. Get the initial cash balance opening candle in. Afternoon, day trader FX. What a nice little sell on the US 30 3 hours or so ago. Brave trading Globex. Some days it works, other days it kills you over and over and over and over again. AZ, I messed about with my magic numbers a bit. Want to reset them all to clean things up. What impact does that have on open future positions? Completely confuse absolutely everything. If you do it, you're in massive trouble. Don't, basically. Magic numbers is how the EA manages your positions. If you change all your magic numbers, EA will start managing completely different positions on different trades and it will all go horribly wrong. So don't do it, basically. You don't need to worry about having them nice and clean. Yeah, as long as they're unique, it doesn't matter what they are. Really doesn't matter what they are. But if you need to manage everything manually because you can't do that. If you have a magic number 10, for example, on here, and a magic number 20 on here, and a magic number 30 on here, and you suddenly make this one 30, this one 10, and this one 20, that version of the EA will start managing that trade, that version of the EA will start managing that trade, and that version of the EA will start managing that trade. The trades will be in totally different positions, doing different things, and it will all go very, very, very wrong. So don't do it. The whole point of the magic number system is to make sure the EA knows which trades it should and shouldn't manage. Right, not a lot of volume at the open. We've still got a minute left. We are looking pretty bullish, but taking a little bit of time to get going. The Dow is struggling the most at the minute. There's your 5-minute opening range. NASDAQ's 1R and holding, but seems to be quite a lot of pressure to hold the market down at the minute. So I can't even say your name. How do you set the magic numbers? In the EA settings. So in the settings, there's a magic number. Yeah, if you go into the settings on any EA, you'll have a magic number field. You just type the magic number in. Just got to be unique. Doesn't matter what it is. It's all covered in the manual. All my products have got fully detailed manuals, which takes you 6.5 hours to read because they're so in depth and have lovely images and everything. And they teach you everything about the strategies, the EAs and everything. Go read the manual. Right, 5 seconds to 5-minute initial range candle close. So NASDAQ, nice bullish break, fairly decent on the S&P. The Dow is a doji. Can't really get any volume on the Dow, up or down, stuck. So we'll see if we get follow through on this candle. Be nice to get a good clean break up to 2R on these. And then the Dow. I have to say, the Dow at the moment, it's weird how it goes in cycles. Probably July-ish time, before the summer trading kicked in, the Dow was the absolute god. It was just beautiful, strong breaks every day. It was doing totally different things to these two guys, and it was just moving beautifully, making loads of money out of it. These two were hedging the crap out of each other and awful, or they were just stopping out and just terrible. Now, this thing, literally, I think for the last week, I have been hedged every single day on the Dow. These guys, no problem, we just go and hit target. The Dow just seems totally schizophrenic at the moment. It really, really can't make up its mind what the hell it's doing. But that's the way it goes. Just sometimes it works, sometimes it doesn't. But the Dow at the moment is just not having much luck at all. However, I have to say, all the hedges I've had on the Dow, pretty much, bar one, have worked out. So when it eventually makes its mind up, it moves nicely. But struggling at the open at the moment, the Dow can't really get any traction. Whereas, as you can see, the NASDAQ, no issues at all. But then we had a period in August, didn't we, when the NASDAQ was just a nightmare. Swings and roundabouts. That's why if you trade everything, pretty much guaranteed one of them's going to work, aren't you? AZ, currently they're all unique, but there's a couple that got changed around because I dragged and dropped charts from the market watch window. So EU now has GJ's number, but they're still different. Is that going to mess with the trades? Well, yeah. If you've got trades running on GJ and EU and you've switched the magic numbers around, either the EA won't manage it or it will manage it differently. It does, yeah. Basically, the answer, AZ, is if you change the magic number, it will bugger everything up. If you've got open trades, you've got no open trades, not a problem. If you've got open trades, though, on those instruments and you've changed the magic numbers, yes, it will break everything. What impact it will have, I couldn't tell you. You'll find out. Just don't do it. If you've done it, though, there's nothing you can do about it, is there? So, can't really help you with that one. Put them back if you can. Right, NASDAQ's rallying. S&P looks like it's holding as well. We're an inside bar at the moment on the S&P. We're an inside bar on the Dow. So if you're taking the 5-minute opening range breaks today on the Dow, so your 5-minute ORB is there. You're currently an inside bar on the 5-minute range. So wait for a nice break of that 5. Obviously, the 15-minute pre-market is already broken along. Looks like the bulls are trying to take control at the minute, though. So hopefully, these will all rally to the upside today. Okay, 5-minute range, 5-minute opening range broken on the. Obviously, it's broken on the NASDAQ already. S&P's just broken above it. Still inside bar on the Dow. Struggling. Future trades should be good. Yeah, as well, yeah. Future trades should be fine. If you're changing magic numbers, yeah. Because it starts from scratch, doesn't it, using that magic number. But if that magic number is in use on another currency, yes, it will screw it up. If you can tell if you go into your Trade Explorer, yeah, into here, and look at your open trades. If you hover over the trades, it will tell you placed by expert ID 51 in this case. Hover over the next one down, placed by expert ID 39. It will tell you which magic number is managing those trades. Yeah. That one. It's a bit hit and miss. Trade expert ID 3. Yeah, so it will tell you what trades are being managed by what. Inside bar on the Dow. So no directional bias at all at the open on the Dow. Doji formed on the NASDAQ. So looking for a break above there. S&P as well stalled out. See if we can get one more push by those buyers up to target, and then I can go and have a look at the FX pairs. Really struggling to make headway today. Look at the volume. You can see, like, look at the size of these candlesticks pre-market. Look at the size of the candlesticks at the open. Yeah, normally, obviously, the open, we have big, strong moves, big candlesticks going in, loads of volume. Pretty much the same price action post-market as pre-market today. There's literally no volume in the market. Same as the DAX this morning. Literally went nowhere for half an hour. I can't believe this market is hanging around for JOLTS. Might be. Be surprised if it's waiting for the JOLTS. We've got two much bigger employment figures coming out this week, tomorrow and Friday. So, doesn't normally, but we'll see. Give this 5 more minutes, and then I'll have a look at FX. It's all because you taught me how to drag and drop charts from the Market Watch window the other day. That's what changed my magic numbers. Yeah, but with VPSs and EAs, you don't change anything on a VPS. The whole idea of the VPS is you launch it and you shut it down and you never look at it. There's no need to look at your VPS. Shouldn't be in there at all. They're literally to sit there and automatically manage trades for you. NASDAQ's finding a little bit of resistance out of this propulsion gap. Dow just made a new high on the 5-minute opening range. Market's really, really, really struggling. Feels really heavy this morning or this afternoon. Really struggling to get anywhere at all. So we've got an inside bar forming now on the NASDAQ as well. And an inside bar forming on the S&P. Really no volume. Don't like these longs at all. Give it another couple of minutes. Afternoon, Amy. While we're waiting for that 5-minute candle to close, just go through what I've closed out today. So closed a few things out today. Aussie dollar yen. I've closed 2 positions out on this. If you look at the 5-minute. The market reversal alerts EA has been taking trades on this long, trying to get me into a long position because it's an H1 RSI extension. I'm not interested in longing anything against the yen at the moment, so I've just closed those out. So that's a little bit of profit. There was another one this morning there, Aussie dollar yen. So the EA has been trying to get me into an Aussie dollar yen long, but I'm manually intervening and not taking those because I do not want to go long on the yen. Aussie dollar CAD, closed that one out today. That was a short. So that was an H1 RSI extension from Thursday last week. Closed that one out a little bit early. We came down towards ADR, bounced out that propulsion gap, which is why I closed it. We bounced into that propulsion gap and back down again. So it's kind of stalling out there at ADR. But that's a nice little long there and then straight back in short again. Aussie dollar CAD. Euro New Zealand. EA closed... I closed this one out manually today. The EA was going to close it out a little bit higher at about 175 ADR. So there's 3 positions on that one, 1, 2, and 3. I closed this out basically because we hit 150 ADR. So I had a nice profit on it, and we hit 150 ADR. Highly likely once we get to 150 ADR, we don't go much further beyond that, and obviously it's pulled back down. So I got out of that one, posted that in Telegram as well. New Zealand dollar Swiss. Close that one out. That's just a single close. So I'm still short on this with 2 positions. But I wanted to take this one off because it was nicely in profit. So I've taken that one off. And if the market pushes back up, I will add that back on again. I still think this Swiss franc is going to power up at some point. I get a feeling we're going to get a little bit of strength coming through on the euro soon. And that will help this Swiss franc go. The fact that we've got this this negative CPI on the Swissy as well, I don't think it's going to be sustained. The Swiss franc does not stay weak for long. It's a strong currency and it's very volatile as money flows into and out of the Swiss national banking system. So we've got 2 entries still on that, pretty much at ADR, pretty much where we are at the moment. So I'm not worried about that position, but I thought I'd bank that. If it goes up, I can add it again and bank it again. If it goes down, I'm just going to bank the 2 that are open. So it's a win-win situation. Pound New Zealand got flat on that one as well. So again, this is very much the same as the Euro New Zealand trade. 1 entry there, 1 entry there, 1 entry there, exit there. Nice profit. That was 150 ADR, 125 ADR. So again, exhausted today. Get out just before the pullback. We've just gone into an accumulation for 5 hours, basically. So I got out of it there. And it's gone nowhere since, so that's a good exit. That's it. So bank's 1.8% today so far. Dow pushing. It's really struggling, isn't it? Tempted to get out of all of it, really, to be honest. It's not, there's no volume, is there? How can I have an invalid stop loss or TP on the NASDAQ when I'm not using a stop loss? Only taken one position. Okay. So, you know, I said I'd finished all the testing this morning and it's ready to go. Not quite sure why that's just taken a single order. I wonder why the profit was a bit small on that. So I will look at the FX pairs in a minute. I just want to watch this because we're really struggling. It looks like it wants to go. The Dow looks like it wants to go now as well. But I'm just dubious about this dropping. And I want to exit if it starts to drop. Looks like it's starting to get a bit of volume coming through now long. Hoping we get a little pop off of this now. Or get trampled down again. It's not got any volume, is it, at all? Got 40 seconds left on this candle. This is another inside bar on the NASDAQ. Might be a wrong decision, but I'm going to close the NASDAQ out. It's $500 or $430. It's 1R. But there we go. It's going now. Typical, isn't it? You close it and it goes. I just don't like the price action. NASDAQ target hit. Dow target hit. Locked in, second profit. S&P target hit. Locked in. So all locked in, all profit. 4 out of 4 today. Thank you very much. I'll be here all week. There we go. Done. I'll let the rest of them just play out. Right. FX pairs. Aussie dollar CAD. So ADRs, we'll go through these. We've got a couple of weeklies hit already. So there's nothing on the monthly ranges yet, obviously, because we're only on the 3rd of the month. I'd be surprised if there was. But we have got a couple of weekly ranges already hit. We're only on Tuesday lunch. So there's a long way to go this week. But we've got 2 hits, so we ought to look at these as well. So let's start off with the top on the ADRs. Aussie dollar CAD. So that one came down this morning, hit ADR within the last hour. I'm out of this already. We've just had the reverse alert on this one. It's literally just triggered off of ADR there. So we bounced straight into ADR off, and then we've put in another leg. So hopefully you're going to get a retest out of those propulsion gaps, and then we're off to the upside, looking for this propulsion gap to get filled from this morning. So that's a good looking ADR reversal. It's also a 50% retracement on the leg. Nice 50% retracement potentially for an up leg. Oil at the moment is starting to rally today. We are getting a bit of a pullback, but I'm not convinced this isn't got further to go down before it starts a new leg up. So the Canadian dollar obviously is very closely related to oil. It gets weakened and strengthened by oil movement. Potentially that sort of move when we get the Canadian dollar strength coming through. But at the moment, this could really go either way. So a nice little quick ADR reversal back up into there. And it doesn't matter if it goes like that or that, like that, you're in. There's no real bias on it specifically. It's a little bit shorter than long, obviously, at the moment. So more bias shorts. But doesn't really matter. You could get out either way if you get into a position trade on that one. So there's a nice little ADR reversal there. Aussie dollar Swiss. So this is the first weekly hit. I'm long on this at the moment. Target back up into propulsion. It's not gone anywhere since we had this Australian dollar move back down again. So we've got this propulsion gap, which is the Swiss deciding that they're not going to increase their interest rates. I think we could well get down into there. So I'll add the second position down here and then look to target back up in that propulsion gap. But from today's perspective, that is an ADR reversal. There's your reversal alert down there this morning. So there's the entry off the reversal alert. There's your W pattern reversal. That looks good. That's also a weekly. So we're only on Tuesday. So the average weekly range is 101. We've done 101 in 2 days. Pound Swiss just hit ADR as well. So big move, 101 pips, 46 is ADR. So normally it's doing around about 100 a week at the moment, and that's already done. So potential for this one to pull back because it's normally done its weekly range. But bear in mind, we are still on contracted ADRs, contracted volume at the moment. So we've only really started volume expansion in the last 2 or 3 days. Thursday, Friday last week, it started to get a little bit bigger. So those ADRs, remember, are ADR 10s. So they're looking at the last 2 weeks worth of volume, the last 2 weeks worth of movement. So we are going to get some ADRs which go over normal ranges and weeklies which go over normal ranges very quickly, because when we return to normal trading range that we had July before the summer trading kicked in August, and we had all the way through September as well, you're going to start to get those ADRs hit a lot quicker, and so the weeklies. So this may well have a lot further to go down. We'll see. Aussie dollar yen extended to the downside. That's an ADR reversal long, an H1 M5 mean reversion entry long as well. I had 2 entries on that this morning. I've cancelled both of those off. I do not want to be longing anything against the yen at the moment with the intervention hanging over our head. Aussie dollar, US dollar, nice ADR reversal and a 3-bar, well, not really a 3-bar reversal, but a nice reversal there. 5-minute reversal, that's already kicked in. There's your retest. So off we go to the upside. I've got long on this already, which got entered into this morning. So that's the first entry. That's the H1 M5 mean reversion entry. Nice divergence there as well. So looking to push back up. Target on that somewhere up in that propulsion gap. That's Aussie dollar US. Swiss yen. Again, same thing. This is an ADR hit to the downside. Nice propulsion gap fill from the move last week. Not taking a long on this one. It's a nice reversal alert when the chart decides to update. Point. But equally not interested in longing anything against the yen at the moment. So. Afternoon, Tammy. Afternoon, Evans. Baha Eric, who've done 1% for the day. Good job. Mariam, pound US dollar. I'll have a look at that in a bit. It's not updating. But yeah, you've had a reversal off of ADR. However, I wouldn't take a long against the yen at the moment. Euro odd, that was a nice reversal alert this morning. So I'm in my first one here, short. That is the H1. So I've taken the H1 M5 mean reversion. There's the entry. What the hell is going on with this platform today? There's your 15-minute entry. Your 5-minute entry hasn't updated. Chart's not updating properly. But anyway, you've got a reversal up there. That's where it was. Looking for a push back down. Target. Not a lot, but I would go in that propulsion gap. We should retest that propulsion gap. Don't see there's a problem with that. We've already tested this one. We've got the old entry from down there as well, potentially for a later date, but it should easily be able to do that if we're going to continue an upward leg. So that's an easy target within ADR. So there's your RSI extension. There's your reversal alert. Look. There's your alert. There's your retest. So that's your M pattern. Target back down into propulsion. Euro Swiss. So Euro Swiss basically, I don't know what's going on with my 5-minute charts at all. Pushed up back into that propulsion gap, and they've sold back out of it. So you got a hit at ADR here this morning, and then we got a reversal alert in there, and then it pushed up to 125 ADR and gave you another entry there, which is now working. So this one's coming out of this Swiss move. So this is where they pulled back into before they pushed higher. We didn't manage to get anywhere all week, and we've pushed back into that area again and holding it. So this Swissy obviously had bad news, and then we've had a bit more bad news. So it's just holding basically at the moment. So you can trade this in any direction really, the Euro Swiss. Your 5-minute reverse alert was there this morning off the 125, but you did have one off of ADR. No, you didn't actually. So that's the first reversal alert today on that. So there's your first entry, which is nicely underway on Euro Swiss. Euro New Zealand, nice easy entry on that one. So this is my exit from all those longs that we looked at earlier. We got the reversal alert and the retest, and off we go to the downside. So nice easy one on Euro New Zealand. The bigger the extension, the better, you know. So these 150 ADRs, by the time it gets to 150 ADR, it's absolutely exhausted. So it tends to fall a lot faster. Pound odd, nice wicks on that one. Coming in at the moment at the open of New York. So we've pushed up again. So you had a reversal alert in here, there. So this was ADR. That was your hit on ADR. That was your first reversal alert this morning. We've had a couple on this actually by the looks of things. And there's another one just about to go in there. So this is still pushing a little bit pound odd. Not particularly great level, this one on the pound odd. We are pushing up into this propulsion gap, but much better to take it, I think, up at those highs if we can. We've broken this high. We ran into it, used it as resistance, broken through it. So it's probably going to retest and push up a little bit further up into this area. So 175 ADR might just come down into that propulsion and bounce back up again. Might come all the way down there, I don't know. But I'd be much more interested in taking it at an area of resistance. That's pound odd. Pound Swiss extended. Again, that's just tapped into ADR. Literally, look at the spread on that thing. That's huge. Whoa. Oh, this is the news. So this is JOLTS going in now. I was going to say, why the hell's that spreading? It's JOLTS job openings. Okay, out. Obviously got out the NASDAQ manually. Out with $1,500 on the S&P. Out with $1,600 on the Dow. So both taken out by the trailing stops, which were 1R. And now it's coming down like a house of cards. So all nice opening range breaks today. So that's a really good morning. Really good day. 2, 3, 4K. Job done. Right. So obviously watch your volatility here. That's a big gap down. Look at that. What a mess. Big spread on that. I don't know why the pound Swiss is being so affected by this. It is. 9.6 JOLTS job openings. So see what impacts that's having on the US. So a little bit more strength coming through on the US. So that might help the unemployment numbers this week. Unemployment rate, we'll see. Job openings is a little bit of a hit and miss one because it's got a positive and a negative impact on economy. So the more job openings you have, great. It means there's more jobs. Yeah. Doesn't mean you're filling them. So what it means is businesses need staff. If they can't get staff, it makes them less effective and less profitable. So it's a double-edged sword, really, the job openings, which is why it's a little bit hit and miss, and can have a very odd impact on the market. So the non-farm employment change and unemployment rate, that's the key, the unemployment rate. That's what we're interested in. Unemployment rate has a direct effect on the outgoings for the government, central banks and government. So that's the one that's important. How many people haven't got jobs and why? Not how many jobs are there. You can have 1 billion jobs out there. If there's only 2 people looking for a job, you've still got 1 billion jobs, haven't you? So it's not as impactful. So you might find you get a whipsaw off that. Certainly it's rallying in the US at the minute. The one that we're interested in is this. Okay, so we have cracked 150 on US dollar yen. What did the Japanese say this morning? Those of you that were in the live room this morning, the Japanese aren't interested in price levels. Yeah. This is what the Japanese said this morning. It's important for currencies to move in a stable manner, reflecting the fundamentals. Normal price action, yeah. We will make appropriate steps on FX moves with a high sense of urgency. At any moment, we could press that nuclear button and kill everybody that is long against the yen. We will stand ready to respond while closely watching FX moves. Japan's price inflation does not have to do FX. Currency interventions are not targeted FX levels, i.e. we're not going to wait for it to get to 150, press the button and kill you all. But whether to carry out currency intervention is determined by volatility. What we do not want is strong moves against the yen. What's that? Strong move against the yen. Could it be today? Pay off the mortgage today. Adding another one. Short. Getting ready. Over 150. Look at what happened last time. We got to 152. And then we pressed the button. We blew up the market. Yeah, close. Very close. This is exactly what the Japanese do not want. High volatility against them on the yen. Oh, it's exciting. Where did I get to? Pound New Zealand. I think I did pound New Zealand, didn't I? Yeah, got out of that one. New Zealand dollar CAD, again, ADR hit to the downside. That's bounced nicely off of ADR, straight down into ADR. Reversal that's just triggered on that. Bit of a big volatile move there, but really big expansion on the volatility there to give you the reversal alert. It's coming down and retesting again, so hopefully that'll be the kickoff on that one. New Zealand dollar yen, again, nice extension on this one to the downside. I wouldn't take this personally. This yen is powering up. I'm short on this one, New Zealand dollar yen, and holding short. Target, as you can see, is down in La La Land down here. I'm going to move it down even further now. So yeah, I wouldn't want to take that long personally. New Zealand dollar, US dollar. That's a nice one. Long already on that one. This is an H1 M5 mean reversion. M5 reversal alert just gone in. And we've just had a big reversal alert short. So lots of strength in that US dollar. If that yen pops today or in the next couple of days, that US dollar is going bye-bye. So interesting to see if they do it. Kind of want to watch this. I just keep your eye on financial juice, just in case, because the last few moves we've had, the last move we had like this, Suzuki got out of bed and actually said something. So, i.e., stop it, and then they went, sorry. So we'll see. Go. Aussie US weekly range hit, another weekly. US dollar Swiss ADR. So Aussie dollar US dollar. So that's now a weekly range hit as well. So we've done our weekly range already. US dollar CAD, we've done our weekly range already. Weak Canadian dollar off the back of weak oil. Strong US dollar rally for the last couple of days, and looks like we're getting another one now. This lot could all get undone very much this week. RSIs, there's quite a few RSIs. They're all the same as the ADRs though. So there's not much point in going through these because it's the same thing. Aussie dollar CAD is an H1 RSI extension. It's an RSI extension and an ADR. Aussie dollar yen, RSI extension, ADR extension. Aussie dollar US dollar, same thing, RSI, ADR. Euro odd is the same thing as well. ADR hit to the upside, RSI extension. Pound odd is the biggest extension at the moment. So that is now up above the 75 level. So I will be getting in short on this one today on that next reversal alert. So I'll be taking a short on that as soon as we get that reversal alert. That's an H1 RSI extension. So I'll be taking a 5-minute reversal alert for a mean reversion play to the downside. All the others we got extended on the 4 hours are pretty much the same as well. US dollar CAD is the main 4-hour extension at the moment. So that move you can see there, this huge parabolic move we've had. We've literally had 2 down 4-hour candles in the last, well, so far this week, and obviously Friday last week. So we've broken out that high. So we're looking for a mean reversion play all the way down into there. I've just got the one on at the moment, but looking for at least a 50% retracement on that, if not a 38. So some kind of pullback on this move. So your 38 retracement is down into that propulsion gap there. 50% retracement back down to there. Might just move my TP up a little bit, actually. I was targeting this high, but if this is going to continue to rally today, just going to move the targets up a little bit on that one. Big move. Big move. Again, from the US dollar. So we'll see what impact we get tomorrow off of the PMI figures, the services PMIs. We're just waiting for one negative news event. McCarthy just said, I will bring up the motion to vacate today. Vacate what? House of Representatives? Is he leaving? Are they all leaving? Are they shutting down? It's not very useful, that, is it? I'll bring up the motion to vacate today. Your house? Rain? US dollar, pound US dollar, someone wanted to look at, didn't they? So yeah, that will be coming down again today. Still. So we had a reverse alert literally just before that news came out. So we got the reverse alert in, and then obviously that candle's now pumping back down again. So we'll see these JOLTS job openings, as I say, they're not necessarily strong movers. So we have just had a reverse alert on that. This could well just be a pullback, and then we're just going to weaken and go back the other way. All these US pairs, as we know, are exhausted at the moment. So indices broken out the other side now. Not that I care. We've had the move. US dollar yen touched 150. Yeah. Sam, what is one way to understanding movement? SOF markets seems rather odd for this to be constant state of being. What is one way to understanding movements of the markets? Seems rather odd for this to be constant state of being. Don't know what you mean, Sam. Sorry. There is no one way of understanding the markets. The markets are totally random. This state of being is the state of being. There's not really any way to answer that one, I don't think. In current climate, what RSI setup would you recommend? Still 75-25 I'm using at the moment. Oh, the motion to remove him as speaker. Oh, I see. That's what that's about, is it? McCarthy vacating. Okay. I like that. Punchbowl reporter tweets, I was told that 5 Republicans will probably join with Democrats to knock him out. US dollar yen. There we go. There's the intervention. What did I tell you? We're off. Hold it. Don't stop. Hold it. Hold it. Hold it. That's not stopping there. That's going down here somewhere. There we go. They found the button. 150. What did I tell you? To the pip. There's the intervention move. So we watch this. So Aussie dollar yen, big strong move down. Swiss yen, euro yen, big strong move down. New Zealand dollar yen. Where's my target gone? Oh, it's still down there. Moved it down. So let's see if this is the intervention. Certainly looks like it. So at the moment, obviously, it's pulling all the way back. Look, but what you'll find is we'll watch this on the 5 minute. So what you'll find is this will suddenly power back up again and be back down there, and then we'll get a good, probably somewhere in the region of 1 to 3 hour continuous buy. They will just buy yen, and they will keep buying yen until the market is out and no one is left to sell the yen to them anymore. They will just buy it and buy it and buy it, and it will rally and rally and rally and rally. So hold it if you got it. If you haven't got it, up to you if you want to hit the button. But if you want to use a stop loss, that's a hell of a stop loss. You're going to need somewhere in the region of 2 ADR stop on it. But that's the typical intervention size. Yeah, so there. So roughly 4 to 6 ADR is what we tend to see. So you're looking at US dollar yen, we're on 73. So 73 times 4 is 292. So that would be 4 ADR. And then from there, what? Found a delete button. That might be it. So 292 from top to bottom. That is, yeah, there you go. So 297, that is exactly 4 ADR. So if you put another 2 on that, which would be another, what, 150-ish? That is 6 ADR. So that's your potential move. So we'll see how we go. Chat's gone mad. UJ, big rejection. Watch out for US dollar. It's about to reverse. Hard move down. UJ, look at yen. US dollar yen coming down. Japan, press the button. Intervention. Look at US dollar yen. Panic. 14-day or 21-day close. RSI, 21. Great call on US dollar yen. Mortgage paid. Good man. How do we afford financial juice without the pro version? You don't need the pro version. You don't need the pro version. No need to buy it. 3. Just passed an evaluation with US dollar yen. Good one, Amy. Holding that 10% profit was extremely difficult. I'm not letting go of that. I'm not expecting that to be it. Let's just see what the indices did. Indices unaffected. As you can see, the yen basically not affecting this. It's US dollar. But yeah, so that's the first start of the move. Hopefully that's not it. I'd be very, very surprised if that was it. I would expect us now to just basically kill everybody, which is what they tend to do. So if you go back and look at the last one, last October, careful not to move my TPs and stuff around. Okay, so this was the first one. So let's zoom in and look at what happened last time. Okay, so there's your first intervention candle, which is what we've literally just had. So pushed down hard, we pulled back to a 50% retracement, then we put the move in. Yeah. So like I said, wait an hour or so. Don't expect that to be it. That's just the initial barrage of orders, huge profit takeoff of the move, and then second wave will come through. That's typically what happens. Then you've got a choice. You either hold it and you take advantage of the next 2 to 3 weeks worth of movement to the downside. It just keeps going down and down and down and down. They may well kick in a second intervention. Yeah, so push down, made a new low on that a few days later, sat there for a while, second intervention. And then from that moment on, there was no recovery. Oh, well, yeah, hang on, sorry, let's go back to where it was there. Yeah, so we had a move down literally for about 2 to 3 weeks. However, if you look at the first intervention that we had, which was the warning shot here, what happened on this one was we had the move, then the continuation, then we pulled the entire thing back and we actually rallied against the yen. But this was from 145. 150 was the second one. Yeah. So we'll see. But I doubt very much whether that'll be it. So I'm triggered on 1, 2, 3, 4, 5 shorts on that now. And I've got a 6th entry there. So I'm going to add on a break below. Where's that order? This is where the broker says, no, we're not adding any more. They've just lost an absolute fortune. Love it. Afternoon, Joe. I'm so confused. I had sell stops, and for some reason, all I see on my account history is a bunch of drawdown controls. You've just been playing around with your EA, haven't you? Maybe you've buggered up the magic numbers or something? Did you say yen intervention will bring down the US dollar? Often you'll find you suddenly get a weakness in the US because to make that intervention happen, for the Japanese to be able to move so much money through the Japanese yen, they have to buy the yen with a currency. Typically, they will withdraw the money from the US accounts and put them into the yen accounts. Yeah. So all FX pairs are a two-way street. Yeah. So you've got the euro and the US dollar. If you want to buy a load of US dollar, you have to buy it with a currency. You can't just go, I'll buy a load of US dollar with nothing, magic, air. It doesn't work that way. So you have to draw money out of one currency and put it into another. So when there's an intervention on the yen, you quite often find they will use the US dollar to make that purchase because there's 2 reasons. First of all, it weakens the US dollar because the whole point is they want the yen to be more attractive than the US dollar. The second reason is if they can do it faster, it's more beneficial to them to have it move quicker. So the faster they can get the US dollar yen down, i.e. sell the US and buy the yen, the easier the whole intervention and the whole move is. But if you flick through and look, you'll find there's not a lot of impact on anything else but yen pairs. There is a possibility this could just be the warning shot. Yeah, so this could be, CAD yen, we've got 225 ADR off the CAD yen there, look. This could be even bigger off the Swiss yen. Oh, okay. So Swiss yen's done 3 ADR. So it looks like they may have pulled a load of money out of the Swiss because the Swiss has weakened more. And the euro. I mean, everything really. We'll see. Market's going to be in shock for a bit, going, what the hell do we do now? All the banks, the institutions that have been pushing this are now in massive drawdown on their accounts because they were told not to do it. It's fun, isn't it? I love it when it happens. I have 5 lots sales riding. Nice one, Francisco. Hold. We need a bit of Braveheart for this, don't we? No volume. That's the old GameStop one. It's a good laugh. But anyway, yeah, hold it. It's struggling to get any further at the moment, but that's exactly what it did last time, and then it just went. So, hold. We'll see where we go with it. Mariam, well, I hope everyone eat today. I'm thinking of skipping work to see the yen movement. Yeah, take the next hour or so off. It seems the real corrective move last time happened 3+ days later. Yeah, so what you'll find, I mean, there's so few instances to look at with this, because it doesn't happen very often. So, you know, there's a good chance this could just pull back and they could push it again. Unlikely, but I mean, they could. But what tends to happen is you get that initial move and profit take move, and then they add. Yeah. So think of this. In fact, if you go down to a lower time frame, yeah, you'll see it. There's the propulsion gap, right? So that's the add. And eventually it'll be like, nope, we can't get back. And it'll just come straight back down. And you'll probably find you get back down to there. Probably further. But what has also happened is you get that move and it gets down to there, and then it just pulls back for a few days, and then they start to really plow into it. The reason being, if you think of it from a bank's point of view, what can't you do now? Yeah, find anybody willing to sell to you at that level. Yeah, because there's no point in becoming a buyer now, because you know you can't get above that level. So if you buy it here, what's the point? You can only take it up to there. You know damn well the Japanese are going to intervene and stop you getting above that level. So there's absolutely no point to be a buyer. So the only thing you can do is become a seller. So they've got to basically try now and sell profit take to pay for the hole that they've just dug themselves into. The only way to do that is to sell it and then buy it back out, and then sell it and then buy it back out. So that's why you tend to get the gradual pullback and then another move. And then we start to fall down the stairs, basically, for as long as it takes for the market to wake up. Yeah. Last time, that's the intervention. We sat sideways for 3 or 4 days, second intervention, and then we rallied down for a month. Yeah. Lower, high. Lower, low. But the world was a very different place last October. So, you know, wait and see. Nobody knows what's going to happen. Could be a totally different scenario today, couldn't it? They just slipped me so hard, they filled me at the bottom of the 5-minute wick, and I got rocked on the pullback. Yeah. This is what I said this morning, if you're in here, AZ. When the intervention comes, you need to be in it. Pending orders will not get filled at the levels you want. Stop losses will not get filled at the levels you want. We were looking at the Aussie dollar yen and everything this morning, and I was saying, if you are in this long with a stop loss here, if the intervention comes, you will not get stopped out there. So if that is 1% risk, you take 4 to 5% of your account because you won't get that order filled there. That intervention move is too quick. Look at it on the 1 minute chart. Yeah. That move came, I mean, that's a 1 minute chart, but that move actually, that 250 pip move, that which is what, 7, 14, 21, 3.5 ADR move came in less than a minute. There's absolutely no way you get filled at those levels. I was already in these. That was my ad here. Yeah. I don't even know. I actually got filled at exactly the price I asked for, but by the time it was obviously down there, I guess they slipped everybody from there down to there, I suppose. But yeah, ham's quick. So there you go. So you've witnessed the intervention move live, although I wasn't watching it, but I should have stayed on it, shouldn't I? I should have had that running because we knew it was going to happen. That's exactly what they said when I was reading it out. We're waiting for the volatility to spike up and then we're going to kill you all. That's why I was reading that to you, because it looked like that was what was going to happen, and it did. Nice being right. I like it every now and again. It is really fun. It is fun if you're short on it. Now go off to your Telegram groups and go off to your Discord channels now and see how quiet they are. See how quiet all the people that have been buying the yen in these rallies for the last couple of weeks. See how quiet they are now. See how many people are moaning about their accounts being blown by a weird candle. There'll be a lot of moaners out there, as well as a lot of people making a lot of money. Kadabra, oh, that's scary. What happened? That's an intervention. Yen intervention, Bank of Japan. Trailed a sell order on IG, slipped by 1 pip. That's pretty good. 1 pip. So this isn't quite as far as I thought it was going to get, to be honest. I had my targets here this morning. I don't know if you were in the live room this morning, but my targets were there. Really annoying at that low. And I moved them down to there when I shouldn't have done, but I did. So there's your 4 ADR, which is what we were looking at for a minimum, which is hit. 6 ADR brings us into propulsion. So I'm going to see if I can get this down to there, and I'll probably take some of this off down here and let the rest ride for the next few days, really. But that's a big pullback so far. So hopefully they're going to stick more on top of that. But we'll see. Retail liquidation Tuesday. Well, anybody using a stop loss is certainly liquidated, or anybody using a pending order is certainly liquidated. Nothing you can do. Just seeing what Darwin X is like. It's exactly the same move on Darwin X. The whole point of the intervention is to bring the US dollar lower. Yeah, don't forget this is just the start. Yeah, they're not going to do this and then go, oh, don't worry about it. Yeah, they're not going to let this go back above there. Well, unless the Bank of Japan run out of money, but I suspect that's highly unlikely. Yeah, US dollar's weakening there, weakening there. Pound US dollar weakening, Euro US dollar weakening. So the US dollar is weakening slowly. But The real purpose of this is not to weaken necessarily the US dollar. It's to make the US dollar yen conversion rate better so that they make more money, basically. So as long as people keep buying the yen, we'll be fine. If the US dollar continues to rally and everything else continues to drop against the US dollar, but the US dollar yen comes down because there's more yen strength than US dollar strength, that suits the Japanese. The US dollar doesn't have to tank. What has to drop is the US dollar yen. So that doesn't mean that the US dollar has to weaken. It means that the yen has to strengthen. So as long as we get people buying the yen now and that moving down, that's fine. The US dollar could still drop everything else. It doesn't have to strengthen up. They're interested in this. This is the exchange rate. This is why I've been watching this level. This is the exchange rate that they're interested in because all of their exports are priced in US dollar. It's becoming uneconomical for the country to trade. That's what this is all about. It's not about we don't like the US dollar getting strong. Our businesses are failing because the exchange rate is too far against us. So what they're interested in is getting people to buy the yen. The cross currency, irrelevant, really. So if you look at the Aussie dollar yen, if the Aussie dollar rallies like crazy overnight and the yen rallies as well, but not as crazily, this could go up as long as the US dollar yen continues down. But if you look at the last time, and again, I'll say this is the caveat. Look at the last time. Look at the first intervention. It failed. For 2 weeks, we sat sideways. It failed. The second one worked. The third one hammered the nail in the coffin. This is the first intervention. Doesn't mean it's going to fail, but it's the first intervention. Yeah, so it just so happens it's at the same level as the one that worked last time. But what if the first intervention today is the failure and we need to push up another 10 ADR before we get a second move that works? I don't know, because it's, this is not the norm. Obviously, this is an anomaly. So what if this isn't the one that's going to work? That could be the case. I'd be very surprised. 150 is kind of like the line in the sand. Yeah, we'll see. But it's going down again now. New Zealand dollar yen as well. I think that's a little optimistic, but you never know. The yen's going to power up. Should have kept my Aussie dollar yen on as well, shouldn't I? Got out of that yesterday. Never mind. Can't win them all. XRupdate.news. Saw it coming, didn't listen. Tried to hit target. Stepped out to smoke and whammo. Stopped out 3 trades. That's because you used a stop loss. If you want to get in again now, yeah, you can play this on a 5-minute now, look, right? If you want to try and get into this, really, anything above here, if this is going to work, we shouldn't really get above that level because we shouldn't come up and retest this. So you could literally hit the sell button now and potentially get a move down to that low with a stop. There's a hell of a risk reward on that, look. So if you took a short right now, just put a stop up there somewhere, you're looking at a 3R down there. Yeah, if you're talking prop, if you want to pass a prop firm now, hit the short button there with 2% risk. Yeah, that's a pass. 2.5% risk. That's a pass. This afternoon, possibly. But if it's a proper prop firm, it'll be looking at your risk and going, that was lucky. Is there a proper prop firm out there anymore? We don't know, do we? Who knows? There you go. So we'll see what happens with this. Hopefully we get a continuation move off the back of this. we will keep our eyes peeled. So if you're, you should be out of the indices today, but they all panned out. I don't know what impact it's going to have on the indices. I've never looked really at what impact that has, but be a little careful if you are trading the indices this afternoon, because if the US dollar gets dramatically weakened by a second surge, you're going to find that these will probably fly to the upside. The reason this has come down was because of the US dollar strength off of the JOLTS. If they turn around and pull a load of money out of the US to put it into the yen now, we're going to find these are going to fly through the sky, basically, and you'll be up very, very, very high. So you shouldn't really be hedged on anything today on these, because the pre-market breaks were clean. The 5-minute breaks were pretty clean. Might have got hedged on that. So you should really be out of the indices today. I'm going to finish the write-up for these for the hedging EA this afternoon and tomorrow, and hopefully I'll be able to get this launched tomorrow, although I'm not sure why that didn't take a trade. I need to look at how it's placing targets, because there's some kind of bug where it, for some reason, has a problem calculating the TPs. Invalid TP. It can't be invalid stop loss because it's not using a stop loss. So it must be an invalid TP. I wonder if it needs to be an integer. We need to do some testing. This only happens in live. It doesn't happen in demo, so it's very hard for me to test it. Anyway. Back in short now. Yep, fingers crossed. FOMO'd into it a little bit. My average is about 50 pips worse off than I wanted to, but I'm in 4 positions now. Cool. Hopefully it drops. Are they allowed to do this? They can do what they like. Nothing to stop you purchasing a currency, is there? If you look at this tomorrow, there's no mention of it anywhere. Look, if you look at this tomorrow, you will probably find the Bank of Japan will come out with a statement overnight saying they know nothing about what's happened. This is what they did last time, yeah. So they come out, you know, it's so obvious. They come out with statements like currency interventions are not targeting FX levels. Whether to carry out an intervention is determined by volatility. They'll come out tomorrow and say it wasn't us, after saying blatantly they're going to intervene if we don't stop pushing. And then they come out and say, nope, wasn't us. It's just a load of FX volatility in the market. It's like, do you think we are stupid? But this is what they did last time. They came out and said, we are not aware of any intervention made by the Japanese government or the Bank of Japan. Well, someone is, because it doesn't do that every day just at random, does it? But we'll see what they say tomorrow. We won't get any. I doubt we'll get anything out of Suzuki today because he's asleep. He's probably not actually. He's probably milking it, making an absolute fortune. But yeah, we'll see. We'll see what they say tomorrow. And then obviously what the next thing to do is analyze the next steps. So after the initial intervention move, we're looking now for what's happening next. So you should, in theory, be safe to say that we are not retesting 150. Whether we are now going to do that for a week or whether we are going to start a catastrophic drop, don't know. Also, if you've got the market reversal alert CA on, make sure you turn it off on the yen pairs, yeah? Because every single yen pair is about to go extended on RSI, on the 4-hour, hourly, and ADR. Don't want to be going long. I mean, you might get a beautiful trade long, but I would say probably not want to go long, do you? So just make sure you're turning that off so it's not taking any longs for you. do we need the EA for the SIH to work? No, it's a totally different thing. It's a completely different EA, this. It's nothing to do with the opening range breakout EA at all. It is to do with it. It's not. But it's completely from scratch, rebuilt from scratch. It's a totally new logic system, everything. And obviously, it's hedging. It doesn't use stop losses at all, which is the ORB is reliant on stop loss risk reward. This is not. Doesn't work in that way at all. It's got. You don't need that at all. It's nothing to do with it. It's a totally separate thing. It's kind of for people that don't like getting stopped out, which is most of us, let's be fair. But the advantage of this strategy, which you can apply to pretty much anything, but specifically for indices, is it controls your over trading, which is one of the main problems people have. So when you get into a hedge, the worst thing that can happen is you have locked in a loss of whatever that loss may be, $800, $1,000, whatever it is. You can't lose any more than that because you're hedged. When you use the traditional opening range breakout EA, like here on the DAX. So with the traditional opening range breakout EA, we've got this continuous mode. So the idea is we go to take a breakout, however many different breakout ranges we want to take. And then with continuous mode, what we're saying is if you break out and you stop me out, go the other way. If you then come back and stop me out and pull back inside that range, try again. The problem with this is every now and again you get a volatile session like this where it goes sideways for half an hour. So you go short, you stop out, go long, you stop out, you go short, you stop out, you go long, you stop out, you go short, you stop out. Yeah. You don't, or you go long, you stop out, you go short, you stop out, you get a trade. 1, 2, 3, 4, 5, 6 losses. 6x loss. Beauty of hedging is you go long, you go short, you sit there and you wait for the market to decide what the hell it's going to do. When it does, you then go, right, we're going long today, are we? Okay, where? And you look for support resistance levels. That's the whole, and you see me trading this in here every day for the last few weeks. What I'm doing is going, right, we're hedged. Sit back, wait, what's my plan? Okay, so the NASDAQ, let's say, for example, I'm hedged on the NASDAQ. Where are we going? Okay, so we've broken to the downside. So we've got this area of resistance there. We've hit ADR. There's a propulsion gap. So I would say if we get down to that propulsion gap, I will get out of my shorts and try and get the longs back. So it just buys you that time and it stops you taking any more trades because you're hedged. You're locked in. Your decision process now is not when shall I take my next trade? It's when shall I get out of the hedge? So it stops you over trading and taking all those losses, death by 1,000 cuts. Everybody's probably done it in prop. I've done it in prop. I've gone on long. I've gone short. I've gone long. I've gone short. I've gone, screw you. I've lost 2% of my account. I'm going long with 1% now. Stopped out. That's 3% down. Right. I'll wait for a bit. I'll take a long. Stopped out. 4%. That's what kills everybody. So this is what the hedging strategy is designed to do. Those days on the opening range breakouts where you get those hideously choppy days stops that happening. The days where you don't get the hideously choppy days and it's a clean break, we get them. We get them too. Yeah, like today. Yeah, today is a prime example. What did we do today? Broke beautifully, cleanly. Yeah, so we broke long, we took profit. 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 These days, it's 4 out of 4. Happy days. You walk away and you don't look back. We also get days where you break long, you break short, you get hedged. You break long, you break short, you get hedged. You break long, you break short, you get hedged. Okay, we've got 3 hedges to deal with. What's the worst thing we can do? Lose 3% of our account. Because now we either get to a target, hit it, take it, and try and trade out of it, or we sit there and we take a 3% loss. But it stops you taking any more trades, which is a lovely strategy because it means that the days where it breaks, which is roughly 35%, you get these clean breaks where you just make money. And if you get them all in the same day as we did today, it's beautiful. most of the time you'll get 1 or 2 clean breaks and then a couple of hedges. The clean breaks, because they're 2R, pay for the hedges and make you a 1R plus, depending on how far the clean breaks go. So you get a roughly 65% roughly of the time, you will either get a clean break or you will get some clean breaks which pay for the hedges, which minimize your losses down to virtually nothing. You'll get the odd day where it's hell. Tough. You get losing days. Those are the losing days. But this gives you kind of like a 50 to 60% strike rate day by day across all indices, which is so much nicer than getting stopped out all the time. And, you know, but you really need to use a slightly higher risk with this, because obviously it means you only get to take 4 trades a day, 1 on each index. So your maximum upside, if you got a 2R on every single one of them, your maximum upside would be 8R, 8%. Your maximum downside would be 4%. So as long as you get 50% of them giving you a positive move, that's a break-even day. So you get more break-even days than losing days and more winning days than losing days. Therefore, it's roughly 65, 66% of the days your quid's in. So it's just a nice way of doing it. But you've got to do that across all indices. If you just do it on one, you might find the DAX P&L goes like this. Yeah. Might make a little bit of money overall on a period. But the NASDAQ will do the same. The other two will do the same. One of them might have a bit of a run. And what you'll find out is the profit curve overall across all instruments is a gradual incline, because the ones that are losing are being offset by the ones that are winning, because you're trading multiple instruments, you're trading them as a portfolio. So, and the set files are pretty much the same for each of them as well. So I think you do more if you choose to buy or only sell in EA. I think you can do more if you choose only buy or sell in EA. Don't know what you mean. Do more what? Okay, so they're adding into the positions at the moment. Well, they're holding. They're not really adding, but they're not withdrawing. Direction. What do you mean if you only buy or sell in the EA? Oh, what you mean if you pick a direction? Well, I can't agree with you there, Joe, can I? Because the whole edge of the entire strategy is that you don't know which direction it's breaking. If you did, you'd only do that, wouldn't you? And you wouldn't be here. The reason you're here is because you're not successful at trading. Therefore, you don't know which direction it's going. That's the whole point. I don't know which direction it's going. I've been trading 15 years. I haven't got a clue which way it's going to break each day. Neither have you, neither has the banks. Because the direction of break is dependent on the volume of longs and shorts. If there's more longs than shorts, it goes long. Yeah. If you're a bank selling, you lose. Yeah. You can't pick the direction. There's no reliable way to pick direction on an index. Don't, before you say moving average, don't tell me that something that plots a 20 or 30 or 50 or 200 day average price is going to predict the future. 200 moving average. Oh, look, it bounced off the 200 moving average. What the hell has 200 days ago's average price got to do with where this thing's going today? Nothing at all. Moving averages are the most useless indicators in the universe. There's always a bias direction, but you say that, Jow. What is it? Show me your magic bullet that tells me which way it's going. Which way is the DAX going today? Where's this going to close today? Long or short? Tell me, because if you know, I'd love to know, because I'll do it. If you say it's going to break up today, I'm going to buy it now. But you don't. It's going down today, is it right? So you're telling me right now that today this is going to close lower than 150.84. How do you know that? You don't. You're just making it up. Everybody that tells you where something is going is making it up, because if they knew where it was going, they wouldn't be telling you, would they? They'd be doing it. I've got mates that work in banks that lose tens of thousands a day because they do not know which way it's going. They've got 25 billion behind them and they can't make it go in the direction they want it to. Why do you think a squiggly line on your chart is telling you which way to go long or short on the DAX today? Utter rubbish. Daily candles. Oh, we had a massive down day today, so it's going to go down today. Yeah, that's what they thought on that day as well, but it went up. They thought it on that day as well, but it went up. They thought it on that day, it went up. They thought it on that day, it went up. Yesterday has got nothing to do with today. This moving average is going down. Does that mean we're going to get a bear day? That's what they thought there. It went up. That's what they thought there. It went down and then came back up again. Yeah? Because something is below a squiggly line on the chart has got nothing to do with the direction it's going to go. At all. You can try and convince me, but everyone's been trying to convince me for 20 years that moving averages work, and they don't. Moon cycles. You're probably better off either flipping a coin or using moon cycles, or what was the other thing we found out the other day? Can't remember. Someone came up with something else that was equally as good for picking direction. Honestly, you can't do it. You can have a bias in a direction. There's nothing wrong with having a bias in a direction. But by the time your bias is formed, it's happened. Yeah. Hey, look, we've closed below the 20 moving average. You're right. We've been moving down for 7 to 14 days. And now we've closed below the 20 moving average. So we should be selling it. Nope, you should have been selling it for the last 7 to 14 days. Now it's closed below it. It's probably going to pull back. So good luck selling it. Agimat, Brian. Yeah, that will work perfectly. That's good at predicting the future. And the new version that uses AI obviously it gets it right all the time because artificial intelligence is equally as good at predicting the future. I could argue with this about this all day, Joe. Every time you tell me something predicts the future, I will show you on a chart. It doesn't. But equally, you can show me a million times it does. But, you know, this is the thing. For this market to move up and down, there has to be two things involved. Buyers and sellers. The only way I'm going to make money is if you disagree with me. Because if I want to buy this, I need someone to sell it to me. So you keep telling me which direction it's going and I'll keep doing the opposite. And we both make money because some days you'll get it right, some days I'll get it right. As long as you get it right by more than you lose, that's how you make money in the market. Doesn't matter which way you go. We've proved that, haven't we? We don't know which way it goes. Today, I sat here and I went, let's see where the market goes today. Oh, it's gone long. I'll go long with the market. Made money. I'll go long with the market. Made money. Did at any point today I say, this is going long today? I haven't got a bloody clue. Neither of you. Neither has anybody. It would be lovely if we did. How did oil do as I was expecting it to spike and go upwards? Looked at oil. Oil was coming down earlier today. Funnily enough, anybody that's predicting the direction of gold, obviously, because it's been coming down for 3 days on the trot, would have told you today it's definitely a sell. However, we seem to be higher than we opened. Good. So yeah, it's pushing back up again. I'm looking for longs up to $100 a barrel now. The revised forecast by the institutions, i.e. Goldman Sachs, etc., is to look for $100 a barrel. So the $95 target has been achieved. Demand is still there. OPEC have just given a report out to say that they're confident in demand maintaining its levels. Supply is currently restricted through Saudi and Russia, so therefore there's less supply coming out. Demand is the same, therefore price should rise. Petrol pumps, unfortunately, means that they're going to go up as well. But I'm looking for a decent pullback on it. So I'm looking for a 50, 60, 18 retracement ideally. We've got a 38, so there's every chance that this could be the pullback and then the rally, which means the Canadian dollar will rally along with it, but we'll see. So that's exactly what we got last time, 38 retracement, and that's exactly what we've just been given. So potentially we could be rallying again from here, but I don't know. We'll see. I'm not convinced enough to want to get into it. Oil seems to be very sideways a lot of the time. So we get these lovely big pushes and then we get these big drops and then we get a load of sideways movement. It seems very erratic. It's a little bit like gold, which is why I don't trade it. So it's not my favorite thing in the world. But if I see a very decent pullback on it, to somewhere around here, as long as we are forecasting longs and they are saying that we are going to get higher pricing, you know you're safe for not getting a lower low. That shouldn't happen. So you can look for areas where we're potentially going to get bounces if the initial entries you get in are wrong. So if you get in somewhere around the 50, 61.8 level, you've potentially got bounces out there. So you can add in and scale into it. But I'm looking for longs. I'm going with what the markets are forecasting, basically, which is higher prices. And there's no reason why we necessarily shouldn't be getting them. So seem to be holding here at the moment. There's no follow through on this move at the minute, but hourly candle closes in 2 minutes. So we'll see if we get a load of volatility. You quite often get a lot of volatility coming in at the end of the hour and at the start of the hour as positions are entered on hourly charts. So we'll see where we go from here. We might get a bit of decent volatility coming through. Would you add the FTSE to the 4 indices? Yeah, you can. Yeah, you can trade the FTSE. I'm personally not getting on particularly well with the FTSE. I haven't traded it much though because I don't have it. So I did trade it on prop for a bit, and the FTSE was the loser pretty much every day. But I haven't tested it, so that might have just been a dip in the P&L, and it's been absolutely flying since. I haven't looked at it, but yeah, any index, the opening range breakout and the hedging strategy will work on any index as long as there is an open and as long as there is an initial cash balance order that goes in at the open. We'll get the volatility. As long as the volatility is there will be a break. So any index, the Japanese index will work as well if you want to trade that during Asia. Again, I've never looked at it. I don't trade it because I like to be there. I like to be watching it. I like to be able to intervene. I don't want to sit there and hope it will just work overnight. It would need a serious lot of back testing to convince me to leave it running full stop, but yeah, could do. Candle's about to close in 2 seconds. Okay, so there's your new hourly candle in. Everything yen, funnily enough, extended on the hourly. Funny that. So we'll see where we go from here. So if past interventions are anything to go by, we will see a continuation move into this. We'll see where we go. Watch with interest this afternoon. So how much money did the Japanese bank must have pushed for this crazy move? No idea. The estimates are, obviously we know this is a multi-trillion-dollar a day market. So to get a normal candlestick moved, the banks are pushing millions and millions through an hour to get a candlestick painted. Obviously, you can see this is 4 times the normal daily movement, which is, if you measure the candlestick, the biggest candlestick we've got on the chart here in the last 3 days has been 22 pips. That one is 290. So you're looking over 10 times the normal volume that it would take to paint a candlestick in one go. Pop. 1 minute. We saw on the 1 minute chart. 1 minute, 10 times the normal volume. This is why you don't get filled. Because, if there's orders sitting here, ready to buy when the market gets there, the market within seconds has eaten every single one of those. And if the next orders are here, and here, it's going to create a vacuum and just fly to get filled down here. And it flies to get filled at the next, flies to get filled at the next, until it gets to a point where there's literally no more orders to fill. And they take profit on the whole thing. Made a load of money. How much it takes, I wouldn't have a clue. My left foot is aching, market going down. Left foot, that's the clutch when you put the accelerator. Murphy's Law will definitely work. Yeah. That's the wrong way to use the moving average, though. In stocks, when price closes above the moving average, you enter long. When it closes back below, it's usually at a higher price opposite for short. There's no right way to use a moving average, easy. Think about it. Look at the daily chart, yeah? And tell me what this dotted line here, right, which is plotting where price has been on average for 200 days, yeah? So this line here is measuring the average of 200 days. That's there, right? Draw a line there. So this little dotted line here is the 200 EMA. This is telling me what the average price has been from here to here. What on earth has that got to do with where this candlestick is going today or in the next week? And someone posted in the group the other day, oh, look, it's just bouncing off the 500 moving average. What has it got to do with the last year and a half of movement? Why do you think a year and a half's worth of average movement has got anything to do with whether this candlestick is going up or down? Yeah. If it closes below, as it did there, you've missed it. If it closes above, you've missed it. It's moved. It's already gone. This is what the market reversal alerts indicator is telling you. Here, the move starts. There, we get out. Here, the move started. There, you get out. If you get in there, you've missed it. This is why everybody goes, I'm going to buy it now. Oh, why has it gone down? Because it's been bloody going up for ages. It's the golden cross. Everybody that takes the golden cross. Look, there's a golden cross. The 24 crossing above the 72. What happened as soon as the golden cross happened? It collapsed. There's a golden cross. What happened as soon as the golden cross happened? It collapsed. Yeah. It doesn't matter what you class a golden cross as. The moving averages, two of them crossing each other. By the time the golden cross has happened, the move has completely finished. I studied these for a long time. The reason I use these two is not for bounces. Yeah, you'll hear me saying here every now and again, it comes back and it touches this 24. Look at that bounce off the 24. It's not bouncing. What it's doing is it's pulling back there because market cycles move in monthly and quarterly periods. This is a monthly and a quarterly moving average. So all I'm doing is measuring average monthly and quarterly movement because I know that banks and institutions buy in monthly and quarterly cycles. These are the only two that I would ever be interested in, the 24 and the 72 daily, because they measure bank movement. Everything else is just measuring the average movement of anything over a period of whatever. Got nothing to do with anything. You know, as Thagos just said, people have paid money for courses. They teach you. They teach you how to trade bounces, and they call them bounces off of moving averages. Look, this pulled back to the 72 and bounced twice because they'd finished that quarterly move. Yeah, it's a 3-month move. 1, 2, 3. Profit take. Next quarterly move. Yeah, it's quarterly movements. That's how everything works. Why do you think we have earnings fortnight every quarter? Because stocks are reported to shareholders every quarter. Banks report to shareholders and profit and pension funds every quarter. Hedge funds hedge in quarterly movement on commodities. Everything works in cycles of months and quarters. Every other moving average is 200 days. What the hell's 200 days got to do with anything? Nothing. Which is why you'll see that this thing went like that for, what's that, 22nd of February 22 until November. Yeah, so it went, what, 1, 2, 3, 4, 5, 6, 7, 8, 9 months without touching the thing. Bloody useless. And then it comes back into it and touches it. And then it bounces off and everyone goes, look, 200 moving average bounce. Hey, look, it bounced back into the 200. Pop. And then it went straight through it without, and completely ignored it. Straight through it, again, ignored it, bounced off of it a couple of times and then went. So how many times did that work? None really, because if you took that moving average bounce there's no way you got a P&L, a risk reward high enough to make profit on it before you stopped out. Wait for a 200 bounce, unlucky, it never touched it. You missed it. So what are you going to do now? Sit here for 6 months and wait for the next one? Useless. Gold. No idea. Gold, don't trade it. But if you look at gold at the moment, obviously it's going to be in a massive downward move because of the US dollar strength. So it's just another US dollar cross. So the question you need to ask yourself is the US dollar going to weaken? If so, you want to be buying it. It's very, very extended. As you can see, it's got massively extended. But gold, because it has an intrinsic value as a commodity as well, it is a cross with the US dollar on most platforms, but it's got its own movement, which makes it a little bit extra volatile. So I don't personally trade it, but I would be looking for longs on it at the moment and trying to scale into a pullback on this. But, you know, you could equally short this and it could go down another 2-3 ADR. It all depends on what these figures come out at this week. So if we get decent PMI figures tomorrow, we might get another rally. The unemployment claims come out well, which job openings have. We might get another rally. If they pull a load of US dollar out to whack it into the yen over the next 2 days, the US dollar is going to collapse and gold is going to fly through the ceiling. I don't give MA any weighting on currencies because currencies just range constantly. Exactly, yeah. As I've said many times, the markets spend 80% of their time in balance and then 20% of their time in price discovery. Price discovery is what we class as a trend. 80% of the time it's in balance where the market is happy to conduct business. So trending is useful. Moving averages are useful in trends. I've got many moving average EAs that I've built. And you test them over certain periods and you look at them and go, this thing is absolutely killing it. And you watch the P&L go like that and you're watching it going, I found it, the Holy Grail. I found the Holy Grail, everybody. Look at my P&L. It's having the odd loser, yeah, but look at it. It's amazing. And all of a sudden it goes, blum, 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 blum. You're like, what the hell happened there? It's basically exactly what you'd expect it to be. You get a trend and then it goes into a range. But what your P&L does when the market is ranging and you're using a moving average is lose 100% of its trades. You will never make as much money in a trend as you will lose during a range because 80% of the time that happens and 20% of that time that happens. Therefore, 80% of your trades are going to be losers, which is why strike rates, if you look at any strategy that teaches you any kind of trend trading, they will always quote you, we only get it right 30% of the 40% of the time, maybe 25% of the time, but that's all you need because we get 15-1 winners. Do you? Do you ever hold them? Is the question you should ask. Yes, you can get a 15-1 winner in a trend, but good luck sitting on that thing for 3.5 months while it gets to 15, because every single pullback is going to scare the crap out of you and you'll be out of it. You'll never hold it. And then when it goes into a range, you just get killed. But it doesn't work. Not because there's anything wrong with trend trading. Trend trading works beautifully. Look at the euro US dollar on the 4-hour chart. Yeah, not this one here. Look at that. Beautiful. Amazing. Did you sell it there and did you get out down there? No. God, no. Because you would have sold it in July and got out in September. There's no way you held that. Yeah. It's just not going to happen, is it? That's 1.5 years. You didn't hold it for 1.5 years. To get the, I mean, if you put a risk reward on this, let's say, for example, we got it on that one, we put our stop above the high, that's only 7R. In 1.5 years, if you got in on that one, put your risk above that high, the most recent swing high, which is what you're told to do in trend trading, you only got 7-1. I just made 2R in 15 minutes on the stock indexes. It doesn't work. Doesn't matter how many times you try it, it doesn't work. I have built models after models after models for trend trading, and every single one of them looks good on paper and has never worked in the real world. It doesn't do it. Can you talk a bit more about the golden cross? Well, all the golden cross is a moving average crossover. So it doesn't matter what moving averages you use. I think the golden cross is the 2050. Officially, the golden cross was the 2050 moving average, and it's normally on the hourly chart. But it's crossover of a moving average, yeah? So it's that point there. Yeah. So this thing from there collapsed. And then the golden cross happened there immediately as it pulled back. That's where you get short. Now, if you do this on another time frame, obviously the movements are faster, and you can argue that, yeah, you need the moving averages are responsive. But either way you look at it, when those moving averages cross over, the move's over. Crossed over there. So you would have gone long there. Yeah, you got a little bit of movement, but then you pushed back. And then you held and sat there for absolutely ages. And then finally the move played out for you. So you got in there. Your stop loss would have been under the swing low, which is what? There. Again, where'd you put your stop on a trend? Could go anywhere, couldn't it? You probably put it there and you would have survived, but you'd have sat through it for 4 weeks before you got your payday. And yes, you would have had a lovely move on it, but it's still only 3R. Again, on the indices, I made 2R on the indices this afternoon in 15 minutes. Why would I sit there for months going through this? Pain. But that's all the golden cross is. But just don't use it. It's the 50 and 200, is it, Brian? Yeah, I know. I can't remember what it is. The golden cross, the actual one. It might be the 50, 200. But again, I have to ask the question: why does somebody think that the average price of the last 50 whatevers, let's call it dailies, 50 days, crossing over the average price of the last 200 days, what relevance has that got on where price is going next? Because today, price is going up on the US dollar. When the unemployment rate comes out on Friday as a negative, if you've just had a golden cross to tell you to go long because the US dollar's been rallying for weeks, and now your golden cross has happened because it's been rallying for weeks, because the moving averages are behind by 50 days, yeah, you just got your moving average crossover. The fundamentals for the unemployment rate come out as negative on Friday. What's the US dollar going to do? Collapse. What has the golden cross got to do with where it's going next? Nothing. What has the fundamentals got to do with where it's going next? Everything. If the unemployment rate comes out as negative on the US is coming down. I don't care what your golden cross says. It's got nothing to do with it. It's telling me what happened 50 and 200 days ago. Yeah. We've been moving down for 3 weeks. So if we push up for 1 week, I'm going to sell it. Why? It doesn't matter. You see what I mean? It doesn't matter what system or strategy you use. The odds of it moving have got nothing to do with what's happened on your chart. The RSI is extended to the downside. I'm going to buy it. Oh, it didn't go up. No, it didn't. What that's told you is the relative strength of the instrument over the last 3 weeks has been negative. Doesn't mean it's going to go up. No, it means that the relative strength has been negative. Telling you what's happened over the last 3 weeks. It's the same as a moving average. This has got no way of predicting the future. What this does show us is when the banks have made a strong move, we know that the particular, most of the time they give us a profit take move. They don't always though, do they? Look at the pound US dollar. They haven't given us a profit take move on this at all. Nothing is infallible. So therefore, nothing can be used. We measure the distance between price and the moving average. You will find 90% of the time when you get 3 or more ADR away from the 24 moving average, you get a pullback on it. But the only reason is because it's been pushing for such a long time, they need to take profit on the move to please the shareholders. The mechanics behind it are not the distance from there to there. It's the fact that the banks have to make a move to please the shareholders. The fundamental thing is nothing to do with the technicals whatsoever, which is why moving averages are just, pointless. They're good for telling you that this is coming down. If you're really bad, and I was very bad at trend direction, I was always like, which one do I use for trend direction? It doesn't matter. They're all telling you what's happened. So if you're really bad at identifying trends, moving averages are great for telling you that we're below it, which means that we've been coming down. Why does that mean it's going to continue to come down? in the same way as the edge of this strategy for the opening range breakout is we don't know which way it's going. So what do? You go with the way the banks are going, because they are the ones that move it. So if the banks go long, go long. If the banks go short, go short. Because they're the ones that are moving it. You are a passenger on the train. You have no way of moving this thing or identifying anything that will tell you when this thing is going to go one way or the other. We can draw support and resistance and get an idea. Yeah. So I can look at a level and go, last time we were here, we bounced. And then we tested it again and we bounced. What does this tell us? Nothing but the banks bought it there. So what's the probability of the banks having an order there? High. It bounced. But does it tell me if it's going to go up or down? No, it tells me that there's going to be a price action movement, which I can take advantage of. I don't know whether it's going to hold or not. A reversal alert tells me that the buyers have taken control, which tells me there's a good chance it's going to go long. It doesn't tell me whether or not there's more sellers coming into the market in the next 10 minutes and this thing's going to drop down and get invalidated. It tells me that the market has got more buyers right now. And if we're at a level that makes logical sense, like an RSI extension or a support, it's a good chance that we're going to get a move long enough to make money out of. That's all it tells me. It doesn't tell me where price is going next, though, does it? If you look at the reversal alert, and this is why people, people have said to me, and somebody said in the Telegram group the other day, can you not leave the old ones on there that get invalidated? No, because you'd have hundreds of them. You literally wouldn't be able to read your chart because it would be full of failed reversal alerts, because reversal alerts are there to show you when there's been a break in structure in the market. There was a reversal alert long there. Yeah, that one worked. I'm just going to find one that didn't work. Can't, there isn't one on that page, but there's a reversal alert there. Look. So that would have had a rectangle drawn on it. It got invalidated by that low. So it would have drawn a new rectangle there. Yeah. Which then got invalidated again. Then it would have drawn a new rectangle there, which got broken, and it would have got invalidated again. And it's just going to litter your chart with crap. Because all it's doing is telling you what's happening right now. The odds are still the same. But if that happens at a level that has happened at before, there's a good chance you're going to get a bounce, which is what happens with the propulsion gaps. When we move into a propulsion gap and you get a reversal alert in a downtrend, that's probably where the pullback is going to start to happen, because that's where the banks sold. If they still want it short, they're going to add it again. But it doesn't guarantee anything, does it? And a moving average coming down isn't going to help you decide whether that's going to happen or that's going to happen. One of those two things is. But this little line showing you what happened 20 candles ago, nothing to do with it. Anyway, that was a good rant, wasn't it? That's everything you need to know about moving averages. Chuck them away. They're useless. Woke up at 5A. MRA EA put me in 6 trades. All were in drawdown and stayed in the negative for the past 5 hours. Very frustrating. And then the yen went, which was my fault, having trouble being patient. Yeah, well, that's part of the game, patience, especially in position trading. You have to be incredibly patient because we spend our life in drawdown, don't we? Unfortunately. It's better being stopped out all the time. Okay, so yen's holding, look. US dollar yen, rather, is holding at the moment. So we'll see what happens in Asia. We may well get a rally towards the end of the day. They'll have a second push, but so far that's it. I'm very surprised that we haven't had a continuation move on this yet, but we'll see. So what's happened the last few times? Again, this is another prime example. The last 3 times we've had a push, a pullback, and a push. This time we've had a push. What we get next? I don't know. Hopefully the last is the same as last time. US dollar CAD short at the moment off of the reverse alert yesterday. But we're embedded up here. So the US dollar obviously is weakened dramatically on the yen intervention. But it's holding. It's holding its own at the moment, look. So the US dollar CAD is holding up at the minute. Taking out the highs, but coming down again. So if we probably got some movement on oil, maybe pushing through at the minute. Yeah. So we've got a little bit of a rally on oil, which is helping the Canadian dollar. I'd be short on it, though, at the moment. But we'll see. You know, we've got a lot of unknowns now, haven't we, with what's happened today. So we'll see what happens tomorrow. So I'm going to hold this overnight. We'll see where we are in the morning. Overnight news, we've got the the New Zealand dollar. Tomorrow morning, 2 a.m. UK, we've got the rates for the New Zealand dollar expected to come out as forecast at 5.5. If that happens, I suspect we will probably get weakness on the Aussie and the New Zealand. That may well help the yen a little bit, we don't know. But we've got that coming out tomorrow. So be aware of that overnight. If you're holding any Aussie or New Zealand and they're in profit, you may want to take partials, maybe break even them, or maybe even get out the whole things. So watch out for that. We've got Lagarde speaking tomorrow morning, which is about 45 minutes after the open, and it's OPEC tomorrow. So potential for a lot of movement off of oil tomorrow. And again, the Canadian dollar. And then obviously we've got the PMIs tomorrow afternoon. So lots of potential movement opportunities tomorrow as well. But the main thing to watch out for is New Zealand dollar, which is happening overnight during the Asian session. We'll obviously need to see what happens with this US dollar yen. If this is going to be a failed intervention, eek. But, well, we'll see. It's the 150 level. So where do you go from here? In fact, let's have a look at where we've been from here. Highest point we've ever traded out on the US dollar yen is 135. And that's 150 we're at the moment. There we go. Yeah, I mean, this 150 level where we're at the moment is it, isn't it? I'm going back to 1998 here. Yeah, this is why, you know, look what happened last time we got up to the 145 level. Utter collapse. In fact, look at every time we've got anywhere near that level. It's just collapse. Yeah, this is the most recent one. So we'll see. Japan Bank not claiming it. They haven't so far. Last time it happened, they didn't. Well, obviously, we know they did. Because, here you go. What did I say about an hour ago? Japan's senior MOF official. I have no comment on whether Japan intervened in the FX market. So, who did? Last night, you were threatening intervention if the movement was unfriendly towards the yen. There's a massive movement because the movement's unfriendly towards the yen. And then you come out and say, I've got no comment. Wasn't us. Sorry, Governor. Did you see us? No? Then it wasn't us, was it? Can't make it up. How stupid is it? You know, it's just like, who else has done it? Certainly not the US, is it? I know, let's wipe off 6 ADR off of our price. Let's make everything in Japan 6 ADR more expensive. Not going to happen, is it? Certainly not the Russians. They haven't got enough money at the moment. So it's the Japanese. It's always the Japanese. But again, they say no, it's not us. It was Greg Secker. It was Greg Secker. Because he's got that magic piece of software that predicts the future. And I bet he was sitting on a live stream. Or I bet he's been sitting on a live stream for the last, what? How long have I been saying it now? Let's go back and have a look. When did I start? Since the 30th of June, I've been calling this intervention, waiting for it to come. Finally, we get it today. I bet Greg Secker's been sitting there saying it every day as well because, hey, he trades live as well. But it might have been. Who knows? He's got enough money, isn't he, Greg? He makes enough money out of educating people. He could probably move the market. But yeah, it's obviously the Japanese. We'll see what happens tomorrow. But yeah, hopefully the start of a multi-day stroke multi-week move from the Japanese. So if you got them, hold them. I shall be holding them. Right, I'll be back tomorrow, same time, 7:50 in the morning for the Frankfurt session, 2:20 for New York. We will see how we get on with these overnight. Hopefully we'll wake up to them being back down at the lows. Bear in mind, obviously, New Zealand and Aussie, so just check your Aussie New Zealand pairs for anything you've got in profit. New Zealand dollar yen I've got in profit at the moment. I know that for a fact. if you want to take it, take it. It's better in the bank than not. If the New Zealand dollar, for any reason, does increase their interest rates, we'll find a push on the New Zealand dollar. So you're just going to make less money. If they keep it as expected, there's a good chance we might get weakness in the New Zealand dollar, in which case you're going to make a hell of a lot more money. So your choices are get out, protect it with a break even, or just leave it as it is. But taking it obviously puts it in your bank, and then no one else can have it. It's yours. Your choice. Right, I'll be back tomorrow morning, 7:50. We'll have a look at the market, see how everything's unfolded with New Zealand. Obviously trade the DAX as usual. If you need anything, I'll be in Telegram. Other than that, have a good evening. Fingers crossed on the end, and I'll see you guys tomorrow. Have a good one.